Ladies and gentlemen, good morning and welcome to Greenply Industries Limited Q1 FY23 earnings conference call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dhiral Shah of PhillipCapital PCG Desk. Thank you and over to you, sir.
Thank you, Michelle. Good morning, everyone, and thank you for joining us on the Greenply Industry Q1 FY23 conference call. In the panel today, we have Mr. Manoj Tulsian, Joint MD and CEO, Mr. Sanidhya Mittal, Joint Managing Director, Mr. Nitin Kalani, CFO, and Mr. Gautam Jain, AVP, Strategy and Investor Relations. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve risk and uncertainties. A detailed statement in this regard is available in the result presentation that was sent to you earlier. I now invite Mr. Manoj Tulsian to begin the proceeding of the call. Thank you and over to you, sir.
Thank you, Dhiral. A very warm welcome to everyone present and thank you very much for joining us today to discuss Greenply's operating and financial performance for Q1 FY2023. To start with, our performance during the quarter was the outcome of our concerted focus on staying resilient in a challenging macro environment of high input costs and the geopolitical uncertainties. Let me share some insights on our standalone financial performance in the current quarter. We achieved a volume growth of 79.5% and a realization growth of 3.1% in Q1 FY23 on a YOY basis. The top line increased by 85% to rupees 395 crores in Q1 FY23 on a YOY basis again. Considering good traction of volume growth in Q1 and supported by our recently commissioned Sandila plywood plant in Lucknow, we are confident to achieve our top line growth guidance for the full year FY23. Our growth in the last quarter could have been better, had we commissioned our Sandila plant and one of our partnership plant facility in Q4 of last year. So there were some amount of capacity constraints which we had to go through in Q1. Sustained recovery in real estate from the past couple of quarters would continue to gain momentum even with the increased input cost and interest rate hikes by RBI. So at this point of time, we are not really still worried in terms of the market traction. The growth is expected pan-India with inclination towards Tier 2 and Tier 3 cities where the desire for the large and better furnished homes has propelled the demand and we assume that that will continue in the near future. Our adjusted core EBITDA margins stood at 9.4% in Q1 FY23. That's a 100 basis point decline from Q4 FY22. Primarily, this is due to sharp increase in raw material prices as well as the change in product mix, which resulted in an impact of almost 5% on a QOQ basis. Although we have taken further price hikes in this quarter of almost 2%, but that only became effective, starting June. So we'll see the impact in this quarter. But that was not, I think, sufficient to absorb the entire cost increases. Going forward, we expect the overall raw material prices to start softening from Q3 onwards, which possibly will have result in improvement of margin profile. At the forefront of driving innovation, we recently launched Green Platinum in the premium segment. The product features with 2x fire resistance and 2x waterproof. It is a new generation product with better value proposition. The initial response has been encouraging and we expect this launch will definitely support us in meeting our top line guidance for this year. We continued with our prudent working capital management and the net working capital cycle stood at 29 days at the end of June 22 at par with March 22 levels. We are also on track in many of our improvement initiatives which we have been talking in the past in the areas of IT automation, product offerings, enhancing capacities, line balancing, distribution reach, and the brand building initiatives. As far as the Gabon business is concerned, we have achieved a robust sales of almost 59 crore in the last quarter, with growth of almost 24% on a YOY basis. This was majorly on account of improvement in supply chain and logistics. Order book has never been a challenge till date. Operating margin was 13.2% in Q1 FY23, improved by almost 453 basis points on a YOY basis. The demand scenario continues to look good from the European and Southeast Asian markets as far as the Gabon business is concerned. The overall outlook is favorable, and we are well positioned to deliver long-term consistent growth. With this, I would like to hand over to Sanidhya to update on our new projects and manufacturing partners. Over to you, Sanidhya.
Thank you, Manojji, and good morning to everyone on the call. Let me share the progress of our new project initiatives. In our Greenfield plywood manufacturing unit at Sandila, Lucknow, we have achieved commercial production, and the unit will support to cater the growing demand. In our upcoming MDF facility in Vadodara, Gujarat, the machinery dispatches and installation has started, and civil construction work is going as scheduled. Due to some bottlenecks in international ocean freight movement and congestion at ports, we are expecting some delays in machinery inflows. However, we are still trying to complete the project in our timeline of Q4 FY23. In our asset-light model, we have two manufacturing partner units in Bareilly, UP, for manufacturing of plywood and allied products. We are already fully utilizing the capacity of the first project. In the second project, we have started partial production in Q3 FY22 and expect the remaining to start soon. Our another plant with manufacturing partners for manufacturing of plywood and allied products in Hapur, UP, should be operational by Q4 FY23. With this perspective, I would like to open the floor for Q&A session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pranav from Equirus Securities. Please go ahead.
Yeah, thank you for taking my questions, and good morning to all. Sir, I wanted to understand on the Gabon part of the business. So now with Europe facing severe problems on importing from Russia, with wood being top 5 commodities imported from Russia by the European Union, do you think that there is some structural shift going on for Gabon, wherein you will see very strong growth coming in for the Gabon unit?
Morning, Pranav. So yes, I would say that our market, European market, has always been good for us, and we have not seen any problem. If you see the robust performance, it is also because the throughput from the European sales has been good. And actually, you answered the question itself. Looks like the traction will improve further. So we are very hopeful, this year that Gabon possibly will continue to run, at the existing run rate of Q1, if not better.
Sure, sir. And sir, my other question was related to this only, that since wood is now becoming a kind of scarce commodity for European Union, and European Union being a large supplier to the Germany and Italy and all of those guys being the large supplier to the EU itself and to the other parts of the world, do you think that structurally for at least next 1 or 2 years we will see wood prices not coming down, and because of that the overall prices will also not come down very substantially for plywood and let's say MDF and particle board?
Are you talking about the international market or for the domestic market?
Yes, sir. Yes, sir. Because in domestic market itself, we are also facing a lot of challenges on the wood supply, particularly on organized side. So just wanted your thoughts on the same.
So on the domestic market, yes, for sure. There has been very mixed. I would say a continued mixed environment in terms of increase and decrease in certain categories of the raw materials. So in quarter one, we saw the chemical prices again going up, and even the timber prices to some extent only going up. Quarter two, now we have seen a scenario where the chemical prices have eased out, but the wood and timber prices have not. In fact, they have actually further gone up. When we are talking to the industry players, when we are talking to the supply source and everything, looks like this might stabilize at this price. And I mean, everyone is talking that the price is crazy. So that's a wish list basis the past experience that it should not go up. But I think something which remains to be seen.
Sure, sir. And sir, on the international side?
No, international side, at this point of time, we are not seeing, I mean, at least for us in Gabon, we are not seeing an increase in the prices of timber. It's the other operating costs which is creating a problem. So like, fuel has become a crisis commodity there. And if I just talk about between Q1 and Q2, because of sharp increase in fuel prices, almost to the extent of 30-35% there, I might have to take a 1% hit in my margin only on account of that. So of course we are going back to our customers and we are taking a price increase to mitigate that. So something or the other has been hitting Gabon more from these operational environment challenges.
Sure, sir. That's it from my side. Thank you very much.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and one now. The next question is from the line of Udit Gajiwala from Yes Securities. Please go ahead.
Yeah, hi sir. Thank you for taking up my question. Sir, could you please explain that what kind of volume and value growth are we expecting for 23? And given the macro scenario, what confidence do we have in this year?
I think, Udit, we had given a guidance at the beginning of the year of an overall growth of around 15% plus. We maintained the same guidance on the revenue side, and out of which we were talking of a volume growth of 10 to 12%. So we still maintain the same. So we think very much we can do all these numbers.
Understood, sir. And so what kind of price hikes, we should expect going ahead, given that you have stated on the timber prices, which is a key RM. So do we see that more price hikes could follow in the industry, and how does it help us, by not losing market share to unorganized or something like that?
Well, I think, so let me answer the second thing first. See, again, there are no industry data which says whether the overall volume of the industry is growing or not. So, if we assume that the overall industry size is similar, then players like us have grown during this period, and which for sure is improvement in market share from the unorganized players. That is one. Second, in terms of coming back on the price increase, it is something which we have been continuously working. We have passed it on in the past also. There is a significant increase which has happened in the last 12 months. Very volatile situation all along. And over and above that, in quarter one also, we took a price increase of close to around 2%, but that was only effective in the month of June. So we get the benefit during this quarter. And while we are sitting in the first week of August, we are looking at maybe one more price increase in the value segment and not in the premium segment. And then again, we are watchful, we are careful. We will see how things pan out in quarter three, and maybe directionally we will look at it what needs to be done next.
Got it. And so just the last question, if I may squeeze, are we seeing any escalation into our capex cost for the MDF business?
Yes, last time also we said that it was approximately looking like around 7%, though a few things still are to be ordered, but I think it should be in that range.
Understood, sir. Thank you so much.
Thank you.
Thank you.
The next question is from the line of Sneha Talreja from Edelweiss Securities. Please go ahead.
Thanks a lot for the opportunity, sir. Just an extension to the previous participant's question. So you mentioned that, your maintaining the growth guidance to about 10 to 12 odd percent. Even if we assume a 12% volume growth, you're actually guiding for a 0% 9-month growth for the rest of the period. Just wanted to clarify that part. Why a 0% volume growth in the coming 9 months?
Yeah, I knew that this will be coming. Okay. See, if you see at the beginning of the year when we had given a guidance of overall 15% plus, okay, I was keeping in mind the type of challenges which we are facing on the capacity side. So what has happened is, you know that our dependence on the trading model of business is also very, very high. But there is always a learning, whatever we do in business, we have some type of learning. We face challenges in the last, 2 to 3 quarters in terms because there is a continuous price increase, which has been happening on the raw material side. And in the increasing price trend, you get to understand that there will be supply side constraints coming from the trading partners. Because, the moment there is a price increase, they don't have the patience to wait for negotiating and all those things. And when as a company, we have so much of dependence, and at times you will end up either paying them a higher price or you end up, somewhere compromising on the supply side. Our own plant, Bareilly facility, which was due to be operational in Q4, somehow for some reason or the other, has still not become operational. Sandila plant, which also we felt that, we would be able to get a full production in Q1, had just started, doing production, and we are only thinking or seeing that it reaches a good production capacity by Q3. And our Hapur facility, in any case, is going to come in Q4. So I would say that, we have the supply side challenges, because of which I think somewhere there will be this subdued growth during this period, and because of which we maintain that guidance. But we can only be slightly better than that.
Okay. But according to that, even after Sandila's plant, we are facing these issues. As you said, the right impact of the same plant will come in H2. So Q2 could be a trouble in terms of volume, where we could see a dip also. Is my understanding correct?
No, not a dip. But what will happen is that, we can better use the Sandila facility. So once my capacity is up and running, okay, I have that option that in case I am facing any trouble from the trading partners, I can use that facility and optimize that facility to use and produce, my value segment from that plant in the near term. Okay. So at least on the volume side, we will not face a real challenge in terms of, some of the supply side challenges which we face in Q1.
Understood, sir. So secondly, on the margins, last time you also guided for around 11, around 100. That's sort of an improvement from FY22 level, which means actually more than 11% margin for the plywood business. This particular quarter, we have seen some bit of pressure because of the raw material prices. And as you said, you only see cooling down happening post Q3. So again, some sense there, where the margins looking at now for FY23? Is there any revised guidance again here?
No, we are not revising the guidance, but as I said, Q2 also looks that possibly because one price increase which we are looking at to take in the value segment may only come in the month of September, and the impact of that again starts reflecting from Q3. Also, there is an assumption that this unprecedented continued increase in raw material prices will soften in Q3. If it doesn't, then we will have to look at ways and means, other means to further look at price hike to improve the margin. So Q2, I would say that I'm looking at maybe some pressure to continue, but from Q3 it will improve. And having said that, I think we will still at this point of time we are trying to see that we don't drop on our margin compared to last year for sure for the full year. That's the immediate thing what we are looking at.
Understood, sir. So one last one, if at all I may just squeeze in, is regarding our MDF business. Although I know it's yet to come in, but how's the scenario that you're seeing in the Western market? Given that one of the leader in this particular space has recently spoken about some amount of subdued demand which they are forecasting, along with the fact that raw material price pressure is something that is already seen in the market and they are unable to take price hike. What's your sense? Are you seeing imports coming back? Are you seeing subdued demand in the MDF segment, or we are, again happy with our earlier guidances and, we'll be able to quickly ramp up the unit? What's the sense there?
I would say a few things, and then maybe I'll ask Sanidhya to add further on that if I'm missing out on anything. See, first thing, what we are looking at in the MDF business is that the MDF business can continue to grow at 20% in the country, if not more. Okay, in the next few years. Second thing, if you really look at, we always believe that the margin today, where it has reached, possibly is not sustainable. I mean, we had done all our calculations at only 20% margin. But I think, looking at today the margins which we see is almost in the range of 35%, our fair assumption is that possibly it will not drop down below 25% even in the near future. Third thing, in terms of imports, where I was just looking at some data, though the sea freight has come down, but it is still significantly high. So I don't see again there is an opportunity for imports to happen in the country. In fact, possibly, this is slightly a wish list, but possibly you may develop that India as a country starts exporting in the next 2-3 years. And not because of the pressure in terms of, pricing or something or demand, but maybe because there will be a natural benefit in terms of efficiencies which may come in this country, and all are very organized players who are actually the MDF players in the country. The market is more of an organized market, if you see. So these are very advantageous things, what I see from an MDF perspective. Sanidhya, anything?
I would just add that, we'll remain to be the only MDF plant in Western India. So, and the product cost is very low, and the outward freight will play a very important role. So, we've already started working in the market. We've already started collecting data. We're already meeting MDF dealers across the country, especially focusing on West, because in West we'll be able to have a pricing advantage in the market because of the outward freight component. So without disturbing our margins, we'll be able to capture the market at a lower price because of the outward freight saving. So, our focus, we would want to sell 50-60% of our production in the West and the balance across India.
Understood, sir. That was helpful. Thanks a lot, and all the very best.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants to press star and 1. The next question is from the line of Nilesh Doshi from India Capital Markets Private Limited. Please go ahead.
Hello.
Yeah, hello Nilesh.
Yeah, good morning to all, sir.
Good morning.
Yeah, sir, my question is related to the volume, and it is on a quarter-on-quarter basis. See, our total sales volume was 17.1 MSM in the quarter 4 22, and it is now 16 MSM in quarter 1 23. Why? First question is why there is a sales was down. Number 2, mainly the sales is on manufactured product is down, not the trading and the JV manufacturing, and because of that, I think the margin is shrink because we are claiming that we are producing the branded and our realization is higher in our own manufacturing products, and margin is therefore the high. Kindly explain the reasons for the same, sir.
Yeah, sure. So first thing first, if you see quarter 4 in our industry has always been better than any other quarters, and normal the quarter 1 is slightly subdued. But if you see during this quarter, we have actually done reasonably well, because when we compare from quarter 4, of course, we wanted a similar volume. That's what we were trying to drive. And in my opening speech, I somewhere mentioned also that we missed out on certain amount of volume because we were not able to get, or we were not able to regularize the supply side. Okay. And coming in terms of, what was your second question?
See, because we manufactured the branded products, and we claim that our realization is higher compared to the trading volume, and so the margin may be shrink in this quarter. Is it the right understanding, mine?
Well, yes. Again, that also I mentioned in my opening speech, Nilesh, that there is a shift, there is a change in product mix also, which we saw in quarter 1, and we are assuming that that may continue. Though, of course, we as a company are mainly dependent on the premium brand. We are leaders in that premium brand category. But because of continuous price increase which has happened in the last 12 to 14 months, and also to some extent there were some visible signs of some slowdown. There were some cash flow issues which our dealers community has been mentioning. We saw that there was some level of possible down trading which was happening, and which also reflected in our numbers. So, and that's where, because we were not prepared to that extent, even our trading partners were not prepared to that extent to deliver those type of volumes. Somewhere we missed out on the volumes also.
Okay. Sir, recently we introduced a new product. I forget the name of that product, but is it under the premium category or it is in the value category?
No, the product is Green Platinum, and it is a state-of-the-art product thanks to my R&D team. And this is something which is not there in the market, after the E0 launch. This is the next level of, innovative product which we have launched in the market. And this is in the premium segment.
Okay. And sir, when our own manufacturing capacity will be operated at near to 100% capacity of all the plants? Huh?
Well, my existing plants, I think, is running right now at 90% plus. But I can only tell you that we are very hand to mouth in terms of, so we may speak about 100 is the capacity, but I think it's almost an optimum utilization of the capacity. So we were just now waiting for the Sandila plant, which is my new capacity, and another plant which we spoke about in Hapur, which is under construction, which will start giving me new capacities in Q4 as of now.
Okay. Sir, increase in the raw material price is the industry scenario. So the other players are facing this problem severely than our branded like Greenply or Century or any other name. So can we are not in a position to pass on completely the raw material price hike to the ultimate finished good?
No, Neeraj, you are right also in what you are saying, and we have been passing it on. But as I said that if you see Greenply as a company, we were always a leader in the premium segment. Okay, because of this continuous price increase in the premium segment, somewhere it is now going slightly beyond the sweet spot. And that's where you will see that the traction in the value segment has improved significantly. Okay, but in any case, if, as I said, earlier also, that if we are assuming that the overall industry is not growing, but a company like Greenply has grown both in volume and value, then it is purely that there is a shift that we are able to increase or gain market share from the unorganized.
Okay, sir. Sir, thank you, sir. That's all from my side.
Pleasure, sir. Pleasure.
Thank you. Anyone who wishes to ask a question may press star and one on their touchtone phone now. The next question is from the line of Priyam Khimawat from Ask Investment Managers. Please go ahead.
Yeah, hi team. Thanks for the opportunity. Sir, you alluded that despite some delay in machinery imports, we are expecting our MDF plant to come in by Q4 of this year. So are we talking about commercial production here or just trial runs to begin?
No, Q4 we are assuming trial runs only, and then from Q1 of next financial year, commercial production.
And at what speed are you expecting the MDF plant to ramp up? Should we expect 60-70% utilization in the first year, or will it be significantly lower at 40-50% levels?
See, we have spoken about this. I think we would be in a position to almost ramp up the entire capacity or the utilization over a period of 3 years. Okay, and year one, if we are able to start commercial production, let's say Q1 or maybe early Q1, then first year surely we are looking at achieving anything between 40-50% utilization. So year one 40-50, year three almost near 100. That's how it should be, plus or minus 5 or 10%.
Okay. Sir, I just wanted to understand about timber availability at a plant in Gujarat. Is the timber cost in West at similar levels to what it is in, say, South, or will we have to pay a premium because of short availability of timber there?
I think I'll answer this question. So, compared to South, we'll definitely be paying a higher price, but our prices will be very, very similar to what it will be in the North.
Okay, sir, can you quantify that percentage premium which we will be paying?
Over South?
Yeah.
Over South, it will be close to around 10 to 15%. And
Okay,
one more thing, Priyam, what we have done is, we started working with the farmers there since we conceived this project. So while we are talking, we have almost done sapling distribution of more than 10,000 acres of coverage area, and we continue to build up on the same. So I think that is another risk mitigation exercise which we have really done well, and we'll continue to build up on the same.
Okay, sir, thanks. That's good to hear. Just one more thing. What is the timber cost as a percentage of our sales, what we are expecting, or a percentage of raw material?
In MDF?
Yeah.
I think 52% would be just the timber cost. The balance is chemical and other expenses of the raw material.
50% of the total raw material cost will be MDF, will be timber cost. Just a
ballpark.
Yeah, just a ballpark.
Yeah, that's good. That's good. Thanks, sir. That's all from my side.
Thank you. The next question is from the line of Arun from Kotak Mahindra Bank. Please go ahead.
Yeah, thanks for the opportunity, sir. So my first question is, you mentioned that there were some supply constraint challenges to volumes from our trading partners, correct? I mean.
Yes.
Yeah, but sir, when we look at the volumes, that possibly what you have given, we did some 6.7. I mean, the volumes that we have given in the past 4 quarters, we see the volumes from the trading partners actually being higher, and our manufacturing plants volume actually are lower. So, any color on that?
No, absolutely. So what I'm trying to tell you is that I have missed out on a potential growth opportunity. So, see, whatever we were assuming or our draw rate was from our trading partners, we went beyond that. But we could have done even better if we had these capacities in hand, whichever way, whether at the trading platform or whether within our own manufacturing platform. So we could have even done better. So I'm saying somewhere, missed out on the growth.
Okay. And so on the margins, you talked about maintaining margins at least for FY23, at least at similar levels to FY22, if not more. This would be excluding the ESOP adjustment, or how that would work out?
No, whichever way you look at, whether pre-ESOP or post-ESOP. In fact, actually, what we are talking is net of gross of ESOP.
Gross of ESOP.
Adjusted, yeah.
Okay. All right. Thank you so much.
Thank you. The next question is from the line of Bismith Nayak from RW Advisors. Please go ahead.
Yes, sir. So just few clarifications. First is, for the next 9 months, due to supply constraints, the volume growth will be marginal only, correct?
Yes.
Okay. And if Q1 mix sustains, do you think the 11 to 11.5% margin guidance that you had, would it hold, or do you want to revise that?
No, I'm not revising it. At the same point of time, as I said, that Q2, I still see some amount of pressure because we felt that, the raw material prices overall will ease out in Q2. The chemical prices eased out, but the timber prices have not. The timber prices have only gone up in Q2. Our own industry experts and the sourcing side, they have all been mentioning that come Q3, it should either soften or it should be on similar lines. So we are again looking at another price increase in the value segment, but that price increase will only now happen earliest, and maybe will become effective from, let's say, 1st of October time. So we will gain again some incremental, margin from quarter 3. Keeping that in mind, I'm saying, and that since in quarter 1 we lost out almost 100 basis points. Of course, there was a small quantum of even increased marketing spend during the first quarter compared to my overall budget. So maybe that also might actually start slightly reflecting in the margin going forward. Keeping that in mind, plus this, on the raw material side, whatever is our thought process, I believe last year margins, we will surely try and achieve the last year margins.
Understood. And this Gabon plant, the whole basically export to EU, have you seen sequential pickup month on month? Because we are hearing news of EU recession and all.
No, we have not been impacted at all. The business is robust. The order book from the European territory is also very robust. And that's why I mentioned somewhere in the beginning that we are definitely looking at replicating the quarter 1 performance in the next 3 quarters also, which itself means, we are talking of almost a 25 to 30% growth over the last year numbers on the top line side.
Understood. That's all from my side. Thanks.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and 1 now. The next question is from the line of Praveen Sahai from Edelweiss Wealth Management. Please go ahead.
Yeah, thank you for taking my question. So first question is related to the premium plywood realization. So can you give the numbers from FY19? How much has increased?
I don't have the number right now, Praveen. Maybe, if you can take those numbers later, I'll ask Gautam. You can check with Gautam. He'll be able to give you those numbers.
Okay, so
there is a significant increase. I mean, I can only give you some number which is at the back of my memory, but I would rather suggest that you take it from Gautam. But it might be an increase of around 10% or 11% over FY19, you said, or FY20?
It's around 11%, sir. So my main question is, as you had also said that the down trading happening in the market and that's affected the premium volume. So are you expecting to, reduce the prices to bring back the volume in the premium segment, or you will rely more on the, the lower grade volumes to pick up?
So in the value segment, for sure, we see better traction, okay, for which we will have to fine-tune our supply side issues. And in the premium segment, as I mentioned, we just launched one new product, which is not there, which is a state-of-the-art product. The initial feedback from the trade has been very good. And we were just trying to build up on the same so that, if there is any level of drop in the premium segment, this new launch will be able to, in a way, hold that, a downward movement.
Mm-hmm.
And we have something more in the pipeline. So, we are trying to do that by introducing better products into the market and safeguard, if not improve the premium segment. The whole idea is how we can improve the premium segment, but that has not been the fact in the last 1 quarter.
Right, sir. And what's the difference between in the realization of premium versus value product?
This is something which, I would not love to share, Praveen.
Okay. Thank you, sir. Thank you for taking my question. All the best.
Thank you.
Thank you. The next question is from the line of Kuber from IDBI Capital. Please go ahead.
Yeah, hi. Am I audible?
Yes, absolutely.
Yes. Okay. So I just wanted to know from the demand per se, what is the current demand from both MDF and plywood segment? I mean, I just wanted to know the on-ground reality from our customers.
See, it is a very mixed, if I talk about the first 4 months, let's say, not even 3 months, it's quite a mixed bag. I'm talking about plywood. purely because MDF we still not started selling. So we're just doing our research and we are doing some market reading on MDF. In terms of plywood, it's a mixed bag. Even within a month, we see 1 or 2 weeks not doing good at all, and then suddenly we see the other 2 weeks coming back strongly. And because of all those, quarter one numbers are there before you, you can see that there is no significant drop compared to even quarter four. Quarter four is always a very, very robust quarter. And coming to quarter two also, July month was good.
So you are not audible.
Mr.
No,
Kuber,
there was some background noise, so I just stopped.
Yeah, you are audible now, sir.
Yeah, coming to quarter two, July was okay. August has just started. Let's see how it goes.
Okay, and what next, sir? I mean, remaining 3 quarters, are we seeing good sense of recovery or demand?
Well, whatever guidance we gave at the beginning of the year, which was like a 15% top line growth, 15% plus, we are pretty confident that we would be able to do that.
Okay, sir. That's it from my side. Thank you.
Thank you.
thank you. The next question is from the line of Asim Bharde from DAM Capital Advisors Limited. Please go ahead.
Yeah, hi everyone. Just first question, wanted to get a sense on, the Gabon paste veneers future. So assuming a 20 to 25% revenue growth for FY23, how would that look on volume and utilization levels there? And going forward, is there a plan to add capacity soon, or would growth start to taper down or flatline by FY24 or FY25?
So I think, we have been waiting for this time when actually Gabon starts reflecting better growth. If you see last 4 to 6 quarters, we have been maintaining that whatever was in our control, we had tried to manage it, managing the operations efficiently, managing our production lines efficiently. Order book has always remained healthy in the last 5 to 6 quarters. But somehow, post the pandemic, these challenges on account of shipping line and container availability has hit us hard. Right now, there are some signs, which gives us that positivity that, we may continue to do this volume of around a similar revenue volume in the next 2 to 3 quarters because the order book is still again very robust. And there was some ease out on the pressure on the supply chain side. I think, how we were looking at it, and maybe we can come back with more granularity of data, that the facility plus we had one, opportunity there in terms of one additional facility which was not operational. So that also we have tried to sign off in case, we need better traction or we get better growth. So keeping both the facilities in mind, we have capacities. Earlier we were talking around anything between 250 to 300 crores. Now it looks like we can even go up to 350 to 375 crores with the existing arrangement what we have. So 1 or 2 years of growth for sure will be possible, and then it needs to be seen. But it's a wish list because something or the other has always kept on hitting Gabon, especially after the pandemic, which is more of the external issues rather than the internal issues.
Got it. Just to follow up, so I think face veneer peeling capacity is 96,000 CBM. In terms of face veneer capacity, how much would that translate to on an overall capacity basis?
No, that is face veneer only, no?
Okay, peeling and face veneer is the same thing, is it?
The sellable capacity you can almost divide it by 2.
Okay, so that's why I think you would be still closer to full capacity utilization, at least as per my rough calculations, not counting the additional facility that you talked about. But okay,
But with the additional facility, we can go up to around 70 to 75,000 CBM also on a sellable basis.
Okay, got it. Okay, and my second question, so just wanted to understand about the supply difficulty on the plywood side from our trading partners. So you did mention that they hike prices immediately, they don't have the patience, so you end up deferring your purchases from that channel. But what gives them the confidence of pushing prices towards you so quickly, given that, even branded players are pushing price hikes with a lag? And I'm sure this should be the case across the industry. So what is giving them the confidence, basically?
No, so I'll tell you, what happens that, the industry, everyone understands what is the matrix in terms of dependability. So when they understand that, we don't have alternate channel or we have not created those capacities somewhere, we are dependent on them, then these things becomes an opportunity for them. Okay. And also, there were some challenges which all of us know, which has happened because of, a urea issue in the Yamunanagar belt also. So many of the factories had to shut down, which were not using possibly the industrial grade urea there. So because of that, there was already a dip in the supply side. And over and above that, when you have a raw material availability issue and also the prices going up, then sometimes these smaller players, they lose patience. And they just look at that whosoever is willing to pay them a higher price, they just want to move to them. So these are learnings for us, and we faced and felt some of these things last year itself. And that's where we started also building up on some additional, manufacturing partner models just to de-risk ourselves. So it's a matter of time. We have taken the steps, maybe a few more quarters, but slowly and gradually, we would be able to de-risk ourselves also.
Would you know how many facilities in the Yamunanagar belt might have taken production curtailments because of the urea issue?
Was extremely difficult question. No one even knows how many units are operational there in Yamunanagar. Every nook and corner there is a unit which is operational. But yes, from the industry sources, from the people, we get a feeler that many of the those are not necessarily permanent shutdown. Okay, those might be even temporary shutdowns. But shutdown has happened during these 4 months.
I believe Mr. Gautam has left the queue. Thank you. As that was the last question for today, on behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.